A bad credit score affects more than just what you can borrow, that you haven't even thought about. I'm here to break it down for you, so you understand what you are truly paying. Your credit score has a significant impact on more than just your ability to get a loan or credit card. A good credit score is like a golden ticket to the financial chocolate factory, where you get access to a pick-and-mix selection of financial products with tasty interest rates. Whereas having a bad credit score leaves you outside looking in through the factory gates. A good credit score tells lenders that they can trust you to pay back your debts. Trustworthy customers are attractive to lenders. They fight for your money with attractive rates, terms, and other incentives, like cashback offers and travel points. On the other hand, a bad credit score tells lenders that you are a risky customer. To offset that risk, lenders charge you higher interest rates, offering you less favourable terms. The higher charges help lenders offset potential losses in case you don't pay them back. Would you rather lend £2,000, knowing that you'll get your money back with an extra £200 interest, or lend £1,000 with an agreed return of £400, but you have no idea when or if you'll get your money back? I know where I would put my money. If you're applying for a mortgage with a bad credit score, you could end up paying tens of thousands more in interest over the life of the loan simply because of your credit score. Higher interest rates can affect the affordability of the mortgage, making it more difficult to make payments. This can lead to a vicious cycle of debt, where you're struggling to make payments and falling further and further behind. We're here to help you stop pedaling the debt cycle, so you can get off and start walking your own path to financial well-being. Did you know that insurance companies also use credit scores to determine your premiums? So a bad credit score can lead to higher insurance premiums. This means that again, you'll be paying more money every month for the same coverage simply because of, you guessed it, your credit score. Insurance companies use credit scores because they believe that people with bad credit scores are more likely to file claims. This may not be a fair assumption, but it's the reality of the situation. Have you just seen that great flat, apartment or house that is finally available to rent? If you don't have good credit, you could be forced to pay a larger security deposit, or you could be stuck in a less desirable place. As a landlord myself, I can vouch that credit history is important. I've been using letting agencies for years to do all the necessary checks. My rental property has consecutively found tenants within the first 24 hours of being available to view. And I'm only ever recommended candidates who have passed all the checks, including the all-important credit check. This isn't to show off that I have an amazing must-have rental property, although I think it's nice. But it's to highlight that even just nice properties get a lot of competition between potential tenants. Having a good credit score can help to separate you from the competition. With such high volume of applicants, if you have bad credit, many letting agencies will just move on to the next applicant. Having a bad credit score can also limit your job opportunities, particularly in fields that require financial responsibility. Many employers check credit scores as part of the hiring process, especially for jobs that involve handling money or making financial decisions. This is because employers believe that people with bad credit scores are more likely to be irresponsible with company funds or make poor financial decisions. In some cases, a bad credit score can even prevent you from getting a job, especially in industries that are heavily regulated, such as finance or banking. When I first joined a consultancy company, the first project I was assigned to was within the finance industry. The client required all consultants and contractors to undergo vetting, just like their regular staff. The process included looking at my credit score, financial history, and a short interview. By this point in my life, I had curated an excellent credit score, and I joined the project without a hitch. However, if I failed the client vetting during my probationary period, I dread to think what would have happened to my career prospects. It's not just all about the money. Having a bad credit score can also have emotional and psychological costs associated with it. The stress and anxiety of dealing with debt can be overwhelming, and the fear of not being able to make payments can be debilitating. an old friend, let's call her Mary, was in a lot of debt many years ago. Mary had moved in with this guy, who over time kept quitting jobs and borrowing money, promising to pay her back. It put a strain on their relationship, amongst other things. After a while they broke up. Thank goodness, I never liked him. Anyway, we went out for coffee. Mary confided that she was still struggling to pay her credit cards, which was causing her sleepless nights, depression, anxiety, and panic attacks. After discussing what credit products she owned, I offered her some tips and ideas that could at least consolidate and reduce the interest she was paying on her debts, which meant she would be able to pay off more of the actual debt than the interest. Month by month, Mary improved her credit score, giving her access to better and better credit products, which snowballed, paying back her debts. She got herself into a manageable amount of debt, and her mental health massively improved. Then, there was an error with a credit account, stating that she had more unpaid debt than she really had. This error was resolved within 3 weeks, but it had triggered Mary's mental health about finances all over again. Mary is doing well nowadays, but she's likely to be more anxious about financial debt for the rest of her life. That is something that can never be paid back. The emotional and psychological costs of a bad credit score should not be underestimated. As Mary paid off her cards, she closed them all down and stopped applying for new credit, which she thought would improve her credit score. This is a common myth which we've already debunked in another video. Let us know in the comments if you want us to make a video about on tips and ideas to help you reduce your debts. Remember to also seek professional advice about your individual circumstances. Having a bad credit score can have far-reaching consequences that affect many areas of your life. We hope we've helped you make sense of your finances. Give us a like and subscribe for more tips, and we'll see you over in the next video.